Hey everybody, Brian Shannon from alphatrends.net. Today is Friday, the 29th of March 2019, and we are done with the first quarter of 2019, and a great quarter it was. 13% for the S&P 500, 21% for the semiconductors, oil up close to 30%. Tough to imagine that we're going to have a stronger quarter this year, but I think the main lesson that people realize this quarter is that nobody knows where resistance is. It is a potential level that we look at and say, where does this market have the likelihood that sellers may regain control? And that level has not been found yet. We've seen it blow through every level of potential resistance, starting with that 50-day moving average, the 200-day moving average, all kinds of Fibonacci levels, etc. There was really only one time in that quarter that I've been bearish, and that was last week. I've been cautious numerous times, but until we made a lower low below a declining 5-day moving average, I had not been bearish. I got back to neutral here the other day, and now we are in a condition where the buyers are re-exerting their strength. So again, just incredible strength for this market the first quarter of this year. We're still battling with this 280 level. If this market does pull back, I think that you have to keep an eye on what is now the location of what people are going to be starting to talk loudly about, which is the golden cross, where the 50-day moving average comes up through the 200-day moving average. That is a potential first level of support if we see a pullback. But again, there's no evidence of such a pullback coming. The next level would be that year-to-date volume-weighted average price, and then the volume-weighted average price from the December lows. So going into next week, you know, this level, this 280 level, has been a hard-fought level here for the last couple weeks, and the buyers are once again back in control as they've made a higher high and a higher low above a rising 5-day moving average. So you've got to go with the evidence of what the market tells you, and the market tells us that despite all this volatility and what appeared to be a potential turning point, we now have the buyers back in control once again. Getting back below 278 will be important if you're bearish, but until it does that, there's just no reason to fight this strength. The Nasdaq also back above its 5-day moving average, which is flattened out. Let's back it up to the daily time frame. You can see that we're still holding this rising 20-day moving average, and we're above a rising 50-day moving average. We'll see a similar moving average crossover in here. I don't pay a lot of attention to a 50-day moving average crossing a 200-day moving average. I think that when those occur, they often aren't really a good timing signal. I prefer to get my timing from the shorter term time frames. And in the Nasdaq, as I pointed out all week to subscribers, 177 was the key level here, that if it broke below that, that's what would have got us bearish on the Nasdaq. It didn't do that. We were cautious, but we did not turn bearish on it. And good thing, because this market continues to exhibit strength. Now, when we see next week, you've got to give the benefit of the doubt to the buyers. But if we break back below 177, then I think you have to be more cautious. Now, the Russell 2000 had a positive week as well, but only after testing that year-to-date volume-weighted average price. And you can see that there were, in fact, buyers there, that level was supported, at least for now. The thing about the Russell, though, is that we have this high, we have a lower high, we have this low, and we have a lower low. So what does that tell us? Well, with a rising 50-day moving average, I'm not bearish because the 50-day moving average is still rising. But I think you have to look at this and say, you know, we're clearly showing over the last month and a half that this pattern of lower highs and lower lows is in place. From an intermediate term perspective, we did get back above this 153. This is the level I just mentioned yesterday that we needed to get back above and hold above. So that's good to see. That helps for the potential that this market can, in fact, recover back up. But I think that, you know, you have to look at this prior support right in here, which did act as resistance. If it was to run right up through that, I certainly wouldn't become bullish. I would rather see it run up to that level, pull back, and then break through. That would be better, because then we would have a better place for risk management and setting a stop underneath a higher low. Semiconductors, this group had a strong move. and they are getting a well-deserved rest here the last week. We did still hold above that rising 20-day moving average, and this prior resistance seems to be holding a support as well. So again, it's very difficult to make any type of bearish scenario. This is what I was thinking had the potential to become a bearish scenario, but in fact the market is back up through that 5-day moving average, and it would be foolish to short it until, if we were to get below this level, then I think, perhaps a test of the 50-day moving average would be coming. The biotechs experienced some weakness last week with Biogen breaking down. This week they tested what's been support so far this year and held. So I think that this market is more neutral than anything. We have the lower highs, of course, but we have this band of support near about 106. As long as we're above 106, I certainly wouldn't be bearish, but I'm not bullish on this group either with the lower highs. So I think that they're just best left alone. Financials did break down, and they're showing what's looking like a bearish flag. You've got to be careful in here. We had a pretty strong breakdown from that these highs, and now it's bouncing on lighter volume. And the year-to-date VWAP, we're closing right on today. The volume weighted average price from the lows we closed above, so that's good as far as getting back to more neutral. Certainly this week's low is going to be very important. If we break below that, then I think you could see the financials unwind a little bit, and that would put more pressure on the broader market. For now, though, you have to look at it and say, we were down on heavier volume and rallied on lighter volume. Only price pays, but we want to be aware of that. So if we look at what would it take to get back to a more bullish scenario, we would look at the high of that. So that was right here at about 27. Let's go back to the daily time frame for a moment. So what I've just circled on that intraday time frame was this peak here. So let's go back to that intraday time frame, which here is found on 30-minute candles. So now we saw that the volume weighted average price since that event, since the peak, is right here basically where we close. So next week, if we can get back above and hold above today's high, it certainly paves the way for recovery, but it's not bullish. Yes, we have a rising 5-day moving average, but the bigger picture says the 20-day moving average is declining, the 50-day moving average about to flatten out. So here again, I would say even if it recovers, it's a high-risk long trade. To me, that means just leave it alone. Let's talk about Apple for a quick moment, because Apple had a bunch of upgrades this week, and if the stock finished a little bit lower on the week. So, when you have all this bullishness after a big move like we've seen the stock move from 144 close to 200. And when we look at the shorter term time frame, there are two key volume weighted average price levels to be aware of. One was since the last earnings report, and you can see that the market gap, that Apple gapped below that, but buyers immediately came back in. So for me right now, if you're long Apple and you're looking for a reason to take profits, I think you have to look at this week's low and say, if it gets back below here, that'll put the volume weighted average price above from this last test, above where prices would be. And to me, that means I think it would head down towards about 178. If that's not a problem for you, no worries. But the stock has had a very nice run since that test of the 200-week moving average and the 61.8% retracement that we spoke about last year. So a little bit of caution in Apple. It's had a heck of a good run. Now I think that some consolidation and pullback is probably in order. I do this analysis every single day for subscribers to Alpha Trends, and I have stock ideas there every single day as well. If you haven't, come take a look sometime.